Hi, I'm Chris Cowher from Patriot Community Bank. I'm a senior loan officer there. And today I wanted to talk to you about some of the different mortgage financing options that are out there. Just kind of a general overview of some of the different mortgages that are available. The first and most popular one is the conventional mortgage. Typically in this area, that's for mortgage loans that are under $417,000. And again, that amount can vary by county, but in Middlesex County, for example, that's mortgage amounts of $417,000 or less. Conventional financings for 30-year fixed-rate mortgages is the most popular. It's also available for 3-year, 5-year, 7-year adjustable rate mortgages. The guidelines for conventional mortgages are set by the secondary market. They're pretty standard and common. The secondary market is Fannie Mae, Freddie Mac, Ginnie Mae. Those type of things are what's considered the secondary market, and again, they set the guidelines. The down payments for conventional financing can be as little as 3% down, but typically 5% down or more is what's required. There are some minimum credit scores depending on the type of property and other factors that are in there. Most of the underwriting for these loans are done in-house at the different lenders. And again, it's very standard. That's the typical mortgage loan in America. If you have less than 20% down on a conventional loan, you can get what's called PMI insurance. And again, that will be required if you're putting less than 20% down. There's another category of conventional loans that are, for example, in Middlesex County, they're called agency jumbo loans. Those are for loan amounts between $417,000 and $465,750. It's a new category of mortgages that was created to help the economy get stimulated about 7 or 8 years ago. And again, they have the same guidelines as conventional financing in general, but most of those type of loans require 10% down or more. The next type of mortgage loans are jumbo financing, and again, that's for all loans that are higher than the $465,750. And again, that amount varies by county, but in Middlesex County, any loan over that amount is considered a jumbo loan. Typically, to get a jumbo mortgage now, you have to have a pretty good credit score of 700 or higher in general. Another general guideline is that you do need to have 10% down or more to get a jumbo financing, although at times there's exceptions available to that rule. The debt-to-income ratio on jumbo mortgages is about 45. What that means is that all of your debt combined can't exceed 45% of your income. And again, on jumbo loans, they're a little more strict on that. Another type of loan that's very popular is an FHA loan. The FHA loan stands for Federal Housing Administration. It's a government loan. Generally, they come in fixed rate of 30 years. They do have an adjustable rate option. You can put as little as 3.5% down. The credit scores on those type of loans can be less than conventional or even less than jumbo available to them. So if you have a little bit of bumpy credit, an FHA loan may be the right loan for you. So you can put as little as 3.5% down. And again, all of that money can come from gift from a family member or relative if you don't have it yourself. So I do allow all of that 3.5% to come as a gift. There's no reserve requirements. And again, generally it's really good for a first-time home buyer who may not have a large amount of money to put down. A negative to an FHA loan is that they do require mortgage insurance. And for that type of loan, it's a little bit higher than other type of loans that require mortgage insurance. The FHA loan is a bit higher than that because of the guidelines for it, and it's on for the life of the loan. The only way nowadays to get rid of mortgage insurance on an FHA loan is to either pay the mortgage off or refinance out of the FHA loan. So that's one of the negatives to an FHA loan. The next type of loan I wanted to talk about briefly is a VA loan. These are loans to veterans, and again, the loan limits vary by county. Typically, again, in Middlesex County, they're for loans of $417,000 or less. A VA loan can have no money down, so you don't need to put any money down if you're a veteran. There is a VA funding fee that's financed in. For disabled veterans, that amount is zero. There is none, up until 2 or 3%, depending whether you're active duty or in reserves. But again, they do 100% financing, great program, great interest rates, easy qualifications, good for first-time home buyers who are veterans. They really want veterans to have home ownership. So again, if you're a veteran, it's a great option that you should look into. The last one I wanted to talk about briefly is the mass housing loans. Again, this is typically 3.5% down or more. You do have to have a little bit better credit than you do with FHA loans. They do have programs with mortgage insurance and without. They do have income limits per household. So whether your house is one person or you have a family of four, the income requirements to qualify for mass housing can vary. But again, it's a good program to talk to your lender about if you have little money to put down and want to only go with the 3.5% down. They have great customer service for their clients after closing. The program is administered by the Mass Housing Association right here in Massachusetts. You do have to complete a first-time homebuyer course if you're buying for the first time with them, but they will allow credit to go down into the 600s. So again, the mass housing is another option. There are many different mortgage programs out there, but that covers over 90% of the mortgages that are being done fall into those categories, and thought it would be good to have a good overview on those as you move along, whether you're buying a house or refinancing, to know what options are available. Thanks a lot.